Hi, this is Joe Rabil with Invest Like a Pro. Today I'm going to give you a stock market update and I'm also going to go through the QQQ in a couple of specific trade setups that took place. I'm on the lookout for, I have one of the viewers asking me to provide an example to a long intraday pattern, like an intraday example of a trade setup. But right now, the setups were just so perfect today to the short side, and I wanted to make sure I showed you how they play out and how they show so many of the different things that I talk about in my videos. So I want to get into that. Let's first get going on the analysis of the market. And I like to start with this volatility page, this volatility chart with the average true range on a weekly basis. I was using the daily, but I think the weekly is really telling us the tale. Notice how late last year this started to turn, and now we're getting an increase in volatility here, and we've got this moving average moving to the upside with the ATR, the average true range of each weekly bar continues to rise on a weekly basis. So when volatility is going up, that's a sign of distribution, and it's certainly something that we need to be concerned with. It definitely adds to the risk in the market conditions. The sentiment actually dropped a little bit. The number of bulls came down. We went from 27 to 21 this week in the difference between bulls and bears. So I think that's we're probably going to work our way down, is my guess, and get down into a lower reading. And we might be able to take advantage of that if it gets low enough. So something we're going to want to watch for. Let's go ahead and get into the spider in multiple time frames. Let me switch this to a monthly chart. And there's really not a lot new here, right? We flipped over into a new calendar year, and I think the probabilities are we want to work our way back towards this 18-month at some point. Now, is it going to go up first? I don't know. I mean, it's certainly looking a little squirrely right now, like it wants to come back towards the 18-month line. The key is that we've spent a long time being away from the 18-month and not touching it. And you go and look at the periods where that happened, you tend to get some pretty good volatility, pretty good retracements, right? I mean, this actually touched a little bit, but then we went through a pretty good retracement. You go through a move without touching it, you tend to go through a harder period. So we're due for a pullback at some point, I would think before too long, certainly during the course of this year. But the market does the most obvious things in the most unobvious ways, and you never know. Maybe we're going to turn around and go to a new high first before it comes down. So we got to stay open. The one thing I will tell you that has been really consistent since late last year, right about at this point when the market went to another new high, is the ADX just died off and MACD has not confirmed. So through this last quarter, really, we were in what I think is a more dangerous position for the market because it's carrying to the upside, but it doesn't have much fuel in the tank, and that's what this momentum is showing you, that we're still flying, what looks to be like at an okay level, but there's really no fuel in the tank, and we're probably carrying a lot more risk from that standpoint. So the 18-week is 457.75 on the spider. If we break that, I would start to get pretty concerned about this one. Now, when I switch over, in fact, I'm going to switch over right now to the Qs. Monthly is basically the same, but look at the difference here. We've broken the 18-week. We closed below the 18-week last week on the QQQ, and now we're following through to the downside. So I would view that as an official break of this 18-week. Now, one of the things that I want to show is where we did it this time. You see how we broke this line and this took out the low of that bar? This was still rising, but this has started to flatten out. Now, it hasn't rolled over yet, but this is definitely putting itself in a weakened position, as is the MACD and the ADX. So we've got some issues there for sure. One of the things I want to point out is the daily chart came down to this support area and undercut and tried to rally. But what was happening was we had a bearish crossover to the downside. So this actually was a pinch play to the downside right here. And I really, one of the things I talk about is the zero line reversals is when the first time you get a signal after it either crosses above or below the zero line is usually a pretty good signal. So this is what I really want to focus in on for this trading sequence that happened today. And so what I want to show is now I've got a daily down here in the bottom left, and you see the pinch play. You rallied up, and we had a pinch to the downside after crossing to the zero line, and we had negative DI starting to show up. And then look at what happened on the hourly chart. The hourly chart rallied up off of massive sell reading. Look at the sell reading in the ADX here. And then we rallied up, and this dropped off because the buyers weren't really all that strong, at least not convincing enough to turn this around. And so what I would do at this point is I know I've got a pinch developing on this time frame, and this has rallied up. Yeah, it's through the zero line, but we have low ADX. So I would go down to the 10-minute, and what I wanted to do to make this easier is I overlaid the hourly 18. So this is the 18 MA on the hourly chart, and I wanted to show how this came down and busted through the 18 on the hourly, and then rallied up and formed a pinch after breaking the zero line. This is a 10-minute chart, okay? We just showed you the same pattern on the daily, and now it's happening on the 10-minute. So you see this move to the downside, and then we try and get back above the 18-hour, but we have a declining 18 and a declining 40 on the 10-minute, and we get a nice pinch set up. And look at this crossover where red DI crosses over and holds on the rally. So this is definitely an intriguing point right here. So let's point that out. And then we had a move to the downside, and then we rallied back to the 18 on which was below the 40. So 18 below the 40, both lines declining at about the same rate. So we want to look at this level right here. So if we do that and we go down to the smaller time frame, let's go ahead and switch over and look at these patterns. So we have our opposing trend set up. We move to the downside, we get strong ADX, and then we get a rally up, and the 18 crosses above the 40, and prices closes above both, and then we get a move inside the zone. You see how this moved inside the zone and then came out? So now our antenna's up, and we're looking for a move back down through. The safe play would have been this bar right there as it closed below the 40. That would also have broken the trend line, which took place with low ADX. And then on this pattern, this was a little bit different. We came into the zone and then came out and tried to make a marginal new high and failed. Same trigger though, closed below the 40 right there. And again, we had low ADX in place. So we had two back-to-back setups that caused really nice follow through right away. I just thought it was too good of a thing to pass up. Look at the low ADX pattern in place on both of those. Yeah, we had a little bit of overrun in the MACD, but that's going to happen on these intraday charts. It happens a lot, so don't get too emphatic about making it fail right at the zero line. In fact, sometimes when the trends are really bearish to the downside, you won't get back to the zero line. So don't get too caught up in getting that perfect. Look at the overall play. Look at the fact that today was a first trigger day in a downside pinch play, and then we got two pinch plays. This was a pinch play, and this was just a rally back to the 18 where both lines were declining. We had strong ADX. So two really nice setups. It shows almost every one of the patterns that I look for. Just wanted to make sure I covered that. Let me just go back. I want to make sure I do look at this one thing. So I didn't go into the daily on the spider, and I just want to make sure you realize. So we're caught in this range. It's 45 to 4,600 in the S&P. There's resistance up here. I don't know that we're going to come down and break down to the downside in this pattern, but we're probably going to come down and test these lows. Is what it looks like to me. So I wanted to make sure I covered at least the daily on the on the spider as well. We did have that same reversal pattern. It wasn't quite as clean as it was in the Qs, and that's why you kind of want to watch at least a couple different indexes to be able to find which one looks like it has the most attractive pattern. So anyway, we want to keep an eye on the 18-week 457.75 on the spider. Other than that, go ahead and post any questions or comments, and we'll see you next time.